We will do a question on interest on a bank overdraft. Now, what is the meaning of a bank overdraft? It means that we don't have enough money in our current bank account to pay for all our expenses and our liabilities. So we go to the bank manager and we ask if we can have an overdraft. That means we will be able to withdraw more money out of the bank as the amount that we deposited into the bank. If you owe money to the bank on an overdraft, you will pay interest, and this interest is an expense for the business, so it will appear in the bank statement on the debit side because it's money going out of our bank account, and it will appear in the interest on bank overdraft in the cash payments journal on the credit side. Okay. Interest on bank overdraft is not recorded as bank charges because interest must always be kept separately. You never record it with your other expenses. Okay, so they give me the cash receipts totals on the end of the month. So I will start with those two totals that they've given me. Then they tell me the bank on 1 November had a credit balance of 2976. So I will show here on the credit side. November the 1st, balance, raw down, 2976. Okay, and they tell me that there's a debit balance in the bank statement at the end of the month. So I will start my bank reconciliation statement with the balance that they've got at the end of the month. Okay, so we always start with our bank statement balance. And they tell me that this is a debit balance, so I will record that 6139 on the debit side. That indicates immediately that we owe money to the bank, because if we've got a favorable balance in our bank account, a favorable balance will be on the debit side, and in the books of the bank it will be on the credit side. If we have an unfavorable balance in our bank, the balance will be on the credit side and their balance will be on the debit side. So now these two balances are not the same, indicating to me that I will have to do some extra entries that were not completed. So instead of ticking off all the amounts as we did with the previous question, here they're just going to tell us what is the difference and we will record it. L. Lange, a debtor, paid his account by depositing 1243 into the bank account at ABSA. So it means this debtor went directly to the bank and deposited this money. So L. Lange, a debtor, deposited 1243. So we received money. This information we get out of our bank statement. We will show that we received the money, and in the bank 1243, and my debtors will decrease with 1243. Okay, then there's a stop order. A stop order is when we sign at the bank that they must pay something on behalf of the business every month, and the amount will stay the same from month to month. Okay, so the stop order is paid to Santam and it's for insurance. Okay, so I will show in my cash payments journal, bank statement, Santam, and the amount is 900. And in the sundry column 900, and this will be for insurance. Now remember, our expense is called insurance. So although they say that it's for insurance premium, that just indicates to you the monthly amount that we pay to insurance company is called a premium, but our ledger account is just called insurance. So don't write there insurance premium. Okay, the next one is for service fees, interest on overdraft, and cash handling fee. Now we can't add interest to the bank charges, so we keep the interest separately. So I will add the service fees 23 and the cash handling fee 9 together, and that will give me 32 rand. And that is for bank charges. It comes out of the bank statement, and this information was obtained from ABSA. Okay, then they also said that there was interest on overdraft 33, so it's money that we have to pay out of our bank account, so it will go in our cash payments journal, and we will show its interest that we paid on the overdraft, so it will go to an expense account called interest on overdraft. Okay, that was all the entries that they showed us there for the expenses. Then there's a debit card payment to ABC. So it means that we paid with a debit card. Now remember, a debit card is linked to your bank account. So if you want to purchase goods or you want to pay expenses or a creditor and you use your debit card, the bank will take the money out of the bank account of the business and transfer it to the bank account of ABC traders. So it is money going out of the bank. So we will show in our cash payments journal that we pay to ABC bank statement, and they say the amount that we paid was 4,320. Okay, now if we look at the following appeared in the journals only. Okay, I'm first going to do that one, then I'll come back to it. 4320, and we will show 4320. This should be creditors control. Okay, then an EFT payment for 780. After further investigation, it was determined that the bank erroneously recorded an EFT by Barbie Stores in the account of Bombay Stores. So the bank will have to correct it. If the bank made a mistake, they have to correct it on the bank recon. Okay, so this amount was an EFT, so it appeared on the debit side of the bank statement, so we will have to correct it on the credit side. Credit incorrect EFT. Okay, now we've done all the entries that appeared in the bank statement. If we look at the cash journals, there's a deposit of 678 on the 30th of November, on the last day of the month, and it was after the bank statement was received. So it means the bank must still record the 678. They will record a deposit on the credit side, so it's credit outstanding deposit. So any entry that the bank must still record, we will show in the bank reconciliation statement, and that amount is 678. Okay, then EFT payments after the bank statement was received. So we made some more payments, and the one payment was 1290 for electricity, and for rent. So it means there is 2 EFT payments that was made. So I will show debit EFT, and say for instance it's 786, it's 1290, and then there's a EFT number 787, and that is for 357. Okay, so when you record entries in the bank recon, remember you have to record it as the bank will record it. Deposits in our books are on the debit side, deposits in their books on the credit side. EFT payments on the credit side, cash payments in their book on the debit side. Okay, then they say there was a debit card payment of 3420 to ABC Traders for inventory purchase. The amount was correctly recorded on the bank statement. Okay, now here they say that debit card payment on the bank statement was 3420. If we go back to the balance, the amount that appeared on the bank statement, it was payment, a debit card payment of 4320. So it means we said the payment is 4320, and according to the cash journals it is 3420. So they tell us the bank statement is correct, so it means that we made a mistake. So I will take the amount 4320 that appeared on the bank statement there, and I will go and look what is the amount that appeared in our cash journals, and that was 3420, and that gives me a difference of 900. Okay, so that means we made a mistake of 900 Rand. We showed it in the cash payments journal. Did we show too little or too much? The debit card payment according to us is 3420, so we showed less than the amount it was supposed to be, so it means that we will go and show in our bank cash payments journal the 900 Rand, the difference between the two. And I will show that that was paid to the creditors 900. So when we showed it originally, we didn't show enough, so we must add the amount 900 and show that we will pay ABC, and that's the difference between the 4320, that was the correct amount, and the amount that we wrote 3420, and if I subtract it, there's a difference of 900, so I have to show that we have 900 Rand less in the bank, and I have to show that we owe 900 less to the creditors. Okay, so if we add up all these columns, then I will go to my cash receipts journal, and I will see that the total there is 3242. Okay, you will just add up the other totals as well. In the cash payments journal, my total is 6594 900 and 56. Okay, so this one okay, and the amounts in my cash receipts and cash payments journal I will post to my bank account. So my bank account on the debit side, I would show November the 30th total receipts, cash receipts journal, and it will be the 3242 that I calculated in my cash receipts journal. Then in my cash payments journal, we showed the total. So on the 30th, I will show total payments, cash payments journal, and that would be 6594. Okay, and if I add up, the total is 9570. So it means that I still have a bank overdraft, so balance carried down to the next year is 6328, and I will bring down that balance the next month, December the 1st, balance brought down, and I will show 6328. Okay, and that 6328, because it's on the credit side, I will show it on the credit side of my bank reconciliation statement, credit balance according to bank account. And then I will add up, and the two totals will be the same, 7786. So what I did, the only difference between this exercise and the previous exercises is that we had a bank overdraft. That means we have a credit balance in the bank, and in the bank statement we have a debit balance, and then we have to pay interest to the bank, and that would be recorded in the cash payments journal.